This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
The price of Russian Urals oil blend fell to $62.99 per barrel in 2023 from $76.09 in 2022, Russia's finance ministry said on Tuesday, around the Western imposed cap of $60, while the oil is currently trading below that threshold, Reuters data showed. The ministry also said the average price of Urals oil blend had risen to $64.23 per barrel as of December 2023 from $50.47 a year earlier. The Russian economy relies heavily on the sales of commodities, especially oil and natural gas. The European Union, G7 countries and Australia introduced the price cap of $60 per barrel on Russian oil in December 2022. Aiming to curb Russia's ability to finance its military operations in Ukraine.
U.S. crude production will hit records over the next 2 years but grow at a slower rate, the U.S. Energy Information Administration, AIA, said on Tuesday, as efficiency gains offset a decline in rig activity. The rise in U.S. output comes as the Organization of the Petroleum Exporting Countries and its allies are cutting their own output in a bid to boost oil prices. U.S. crude production will rise by 290,000 barrels per day, BPD, to a record 13.21 million barrels of oil per day this year, the EIA said in its short-term energy outlook, STEO.
Moving on to the top news in the energy sector.
2 Indian state refiners are seeking to boost imports of Saudi crude oil after the kingdom cut the official selling price of its key export grade for February to the lowest in 27 months, company sources said. Indian Oil Corp., the country's top refiner, and Bharat Petroleum Corp. Are looking at lifting an additional 1 million barrel of oil each from Saudi Aramco in February, the sources said. Saudi Aramco typically notifies Asian buyers of their monthly crude allocations by the 10th of every month. IOC is seeking more oil from Saudi Arabia and West Africa partly as it is facing problems in buying Russian light sweet crude SOCL because of challenges in payments, one of the sources said.
Oil rose for a second day on Wednesday after an industry report showed a bigger-than-expected drawdown of crude inventories in the United States, the world's biggest oil consumer, that bolstered demand sentiment. Brent crude futures rose 26 cents, or 0.3%, to $77.85 a barrel at 0724 GMT, while U.S. West Texas Intermediate crude futures climbed 27 cents, or 0.4%, to $72.51 a barrel. Oil gained about 2% in the previous session on supply concerns after reports of a Libyan supply outage and the continuing regional tensions from the Israel-Gaza war. However, trading on Monday opened the week down more than 3%. Next, we have the top news in metal markets. Saudi Arabia has created a mineral exploration incentive program with a budget of over $182 million. The country's Minister of Industry and Mineral Resources said on Wednesday. Mining is a key part of Saudi Arabia's efforts to build an economy that does not rely mostly on oil, involving a shift towards tapping vast reserves of phosphate, gold, copper and bauxite. On Tuesday, Minister of Industry and Mineral Resources Bandar Al-Khoraif told Reuters that the government has revised upwards estimates for its untapped mineral resources to $2.5 trillion, from a 2016 forecast of $1.3 trillion, and reiterated it at the Future Minerals Forum on Wednesday.
Oversupply weighing on near-term prices of copper on the London Metal Exchange, LME, has created record discounts against longer-dated contracts and an opportunity for Asian buyers to purchase the metal cheaply, traders said. The discount, or contango, for the cash copper over the benchmark 3-month contract on the LME hit a record high of $108 a metric ton on January 8, while the discount over the February contract stands at $58 a ton. These discounts are being used by Asian buyers to negotiate lower prices with sellers of the metal used to make wire cable for the power and construction industries.
We will now look at the top news in the agricultural sector.
Malaysia's palm oil stocks hit a 4-month low at the end of December as production slumped to its lowest level in 6 months, offsetting a slowdown in exports. The reduction in stocks at the world's second-largest palm oil producer after Indonesia would help in supporting benchmark futures, which lost 10% in 2023. Inventories fell 4.64% month-on-month to 2.29 million metric tons, the lowest since August, data from the Malaysian Palm Oil Board, MPOB, showed on Wednesday.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.